Okay, welcome to the Small Cap Discoveries one-on-one. Today on our call, we have John Mastromattei, better known as Johnny Lambo on Twitter. And I'll now introduce our host, Paul Andriola, and let him take it from here.
All right, thanks, Trevor. First up, before we get too far, I want to remind everybody that we are not giving investment advice. So if you hear of any stocks today, consider it non-investment advice. And if you're in need of investment advice, obviously always consult a professional. So on that note, Johnny Lambo,
Paul, how you doing?
The legend. I'm doing well, my man.
You're the legend. I'm not the legend. Seriously, I'm just a nobody.
We'll figure that out later. Thanks for joining us. This is new.
Thanks for inviting me.
Well, we're happy to have you on. Why don't we just start by having you tell us a little bit about what you do, and then we'll take it from there. Who is Johnny Lambo?
Johnny Lambo is a deep value investor that has patience for years for his fruition of NAV to finally come to light. Like, I'm not one of those traders that's like hour by hour who's grinding it out. I find a stock that I think is worth X and I'm buying it at a quarter of X, and I will accumulate and I will spend months just taking it all, knowing that one day I will get my 4X because I will get the full NAV for the stock. I've been doing this system for years now. I try to focus it on certain sectors, and then I see what's inside there that's cheap versus its peers, and the system has worked fine for me. And I find now in Canada, the last 10 years, the landscaping's changed, because in the Canadian and microcap land, there's like no more funds left. They're all gone. So it leads more of a discount to NAV with these smaller companies. Like, there's actually higher valuations to go private on some of these stocks, like at 2.5 times EBITDA, than stay in the public market. So there's a lot of opportunities out there for small and even micro cap value names, like some names you're involved with as well. Like, it doesn't make any sense how a private business could sell for 8 times, EBITDA, but yet they're on the market at 2 to 3. So that is usually the opposite. Stocks are usually more expensive, than they would sell for on like a private deal. So
yeah, no, exactly. I think we've recognized that for years, that that there's some deep discounting and mispricing in the microcap space because of just what you said. There's very few professionals looking down market. What's your background? Like, school, what sort of did you do before you got in this?
I went to school, but I didn't go to school. Like, I just graduated with like a 6.5 and didn't attend classes and just got a BCom in finance. Mm-hmm. My investment professor, actually, 4th year university, I'll never forget it. It was the first day of class. It was 2008 or 2007, one of those years. And he's like 80 years old. And he tells me, the first 10 minutes, tells the whole class, there's 30 of us, this is the random walk of Wall Street, and it's like random. I'm like, I raised my hand. I'm like, sir, this is not the 1950s. It's like charting, algos, trend following. He's like, what kind of crack are you smoking back there? That was his answer to me. And I'm like, okay. I got a 20% on the final exam because I didn't study my journals, but I came first in the stock trading competition, of course. So yeah, it's pretty funny how people think all these studies is what the stock market is, but it's all experience. Like, I would love to have my own university course just to teach retail guys at home what they should know and what they should look for, because you won't learn this anywhere else. And then once you have this kind of advantage to the rigged casino, you're even more at an odds of always succeeding in this, how this business works.
I couldn't agree with you more. I think people who work in the industry, I think the best thing they learn from that is just what the tricks of the trade are, rather than sort of the economics and whatnot. So you touched on a little bit of your investing style. You're a deep discount investor, but how do you go about finding things? Like, what do you look for, and how do you find them?
Okay, so my first favorite indicator, but currently I'm off of that right now, just because the market itself is so richly priced that I'm kind of taking a step back with the value stocks. I'm just involved in gold right now, to 90%, but I have puts on the GLD, out the money, extra hedge, just in case. I'll always be protected somewhere. I'm not going to wake up one day and I will lose everything. You need out the money. We're talking hedges that pay 2,000, like 200 to 1, like stuff like that. Like everyone needs that fine insurance in their portfolio. Like March, there was one hedge fund in the States that went up 4,000% this year because they had that suicide insurance, which everybody should have because we are in a bubble. So go back 6 months from now when the market was cheap, my favorite filter is price to book. I'll go on the TSX website and just filter everything 0.3 price to book and under. And I want to exclude goodwill. So I go look at there's an indicator on one of those. It says book value without goodwill. I click that one, 0.3. And then I'll look even further for like something with a lot of trading volume. Like I don't want to get stuck in something. And then I'll like, hey, is this really, and then I'll just do my homework more, go on CDR, rip it apart. Is it profitable? Is there even assets in there that we could sell for higher price? And sometimes I'll actually get involved with management and I'll rustle some feathers. And that's worked out really well because they actually want a guy like us to see the value so everyone else can see the value. And if that makes any sense, Paul.
Absolutely.
Yeah.
So what else you look for? Like, how do you go about it on a day-to-day basis? Do you call management? Do you talk to, anybody else in the industry? Are you a one-man band? How do you play?
Yeah, I guess a lone ranger, one-man band, but it's more depends, like, if I've taken the position and I've maxed it out and it's not going in my favor, then I'm like, management, you should be doing this, this, and that, and we're all going to be better off here, like a share buyback, a Dutch auction, a special divvy, some kind of structure, like something to unlock the value for shareholders when insiders only own like 3% or below. Then right away, like I don't even invest in those things because they're not aligned with us. Because with a microcap owning 3%, what is that on some of these companies, like 300 grand worth of equity in the company? Like and I have another weirdo indicator. I take a CEO salary divided by what equity they have in the company, and I use that as like a cash flow yield. Like if they only have 300 grand of stock and they're getting paid 200 grand a year, they're yielding 66%. You know what I mean? Like it's really their rake every year. And like that business, hey, maybe it's doing 10 million in rev and no EBITDA, but it's doing that no EBITDA because the management doesn't want it to do any EBITDA and they just want their money every year. Those companies I can't stand because they've abused the shareholders and ruined the capital markets because people have a bad taste of buying a value penny stock that's profitable because like they're just scared that penny stocks is like evil. It's not. Like some of these mining stocks, they're penny stocks, but hey, there's $10 billion in the ground. So people just have to get the concept of you're buying a business. You're not buying a stock with numbers. You're buying a company that you're not buying it at 28 cents. You're buying it at $20 million valuation, and you think it should be $200 million valuation. It's going to get to 200 million. We don't know when, but it will get there. And that's how I go about it. But how do you go about it, Paul? Like, tell us about like what's your filters and stuff.
So we a lot of it is based on financials. So we do a lot of the sort of stuff that you just talked about. We screen CDR. We're going through financials on a daily basis. We're looking for a little less on the asset side. We're looking more for a growth engine, right? We want to see a company that's being mispriced because what I find, if anything, the market has a harder time pricing growth than it does assets. If I look at, balance sheet, I'm going to see, okay, they got real estate, they got this, they got that. You can actually put a number on it and say, okay, this should trade at least 1 times book. With growth, should this company trade at 20 times earnings or 50 times earnings? It's a lot harder for the amateur to understand and price growth. And like you said, in microcap space, it's mostly amateurs. I call it amateurs. There's a lot of really smart guys in this space, but the pros who have the big money, they've all had to go up market, and you know what that's like.
I was buying a big winner for us last September was Pazera. I bought the company on an EV basis, like net to net cash. I was buying it for like 0.1 of sales. Like it's a software company. Like the market is just so confused in Canada. It's like it's so much opportunity though for guys like us, like that are buying real businesses at a discount.
I think that's the advantage that retail investors have. They tend to want to go to the names that they recognize, but where the real advantage is, you got to go where nobody else is playing and find stuff that's mispriced. So I completely agree with you.
So kind of have a similar strategy, I guess.
Yeah, well, I think similar in that you're looking for assets. I'm looking for an income statement, right? But we're still looking for mispriced assets ultimately, right?
For me, I'm trying to evolve more to do half and half, because the problem I realize going on the NAV and net asset basis is time is not on my side, because as if I'm generating free cash flow every year, then I'm good. But if I'm waiting on a dead asset to get realized, that's always the scary thing. So I want to spin it a bit different.
Right. No, understood. Understood.
Yeah.
So, I mean, how do you go about it once you find an asset, once you find an investment you like? When do you sell? Like, where does it go, and what motivates you to sell, and how do you do it?
Selling, that's always on a specific basis, though. It's always a different one. Yeah. There's one name I've actually been involved with for like 7 years. You know, and then there's just some names that they bounce around forever, and I like it at this level, and I think it's a sell at this level, and I just trade the business value. Like, you know, business value fluctuates from 20 to 40 million and keeps going around there, and I know it's cheap at 20 and it's fair value at 40, and I'll just play the range forever. That's probably more of my strategy, but yeah.
Gotcha. So okay, so you mentioned that you don't mind holding it as long as it takes if you see the value is still there.
Exactly.
Do you have an average holding period with this strategy?
No, it's just all specific. It's all like case by case.
Case by case. Gotcha.
Yeah.
Gotcha.
Especially like one of the stocks I'm involved with right now, like they're, oh, sorry, I just lost feed. There's just like a lot of leverage. Like, let's say one specific event, like Emerita, for example, they have 2 projects, the Paimogo and the Asnacolar. They were both like in a bidding process with the government because they were appealed back in the 90s. There was like an environmental issue, so the government pulled both of them back. Gower, the CEO, has been fighting for 5 years to be the qualified bidder. Well, they were the qualified bidder and they still lost. So then they appealed it, and all the judges said they've won Paimogo and they've won Asnacolar. If you read what the judges have said, the company's now been awarded Paimogo, a high tonnage property in Spain, and the company also has a chance of winning another $1 billion project, and the market's not even valuing it for anything. So I tell people the way to look at these binary events is, picture if we were a liquid stock on the NASDAQ and Emerita had 2 more zeros on it, and it was going to win a $100 billion project. And Emerita would trade like a phase 3 biotech company if they win, but the market would already be implying a value for that. But the problem with penny stocks and microcap land, there is no, you know what I'm trying to say, Paul? There's no value for like a chance of winning something. It's either yes or no. So if you know your chance of winning is 95% and the market's not factoring any in for it, you know you should be buying the stock. And I'm long that name. Like, it's probably my biggest holding right now.
Is that right?
So I really love that name.
So you mentioned you're about 90% gold. Why gold? Why gold right now?
Because I think in the long run, it's the only thing that's going to work here. Like, we all know the game has to keep going. I've witnessed 3 bubbles in my life, 2000, 2008, and this one. And every time you think it's going to fall and it falls, you never think it's going to go back up. But somehow we've gone even crazier. So they're going to keep just printing this money till it becomes a problem. And the market's still not saying there's a problem with it. So I think gold is the only way to go, because it's protection against the dilution of the US dollar. Yeah.
Yeah. No,
how do you feel about gold?
Well, I'm like, we don't do anything in the resource side, simply because that's, you know, sort of not our specialty. But you know, I concur with what you're saying. I think interest rates are going to have to stay low for the foreseeable future. And you know, you see the deficits that we're seeing; they're printing like crazy. So gold has its value. Yeah,
100%. And if you remember where this all started, it all started back in, if I remember, it was September 2018. The yields were rising. The 10-year, everyone said, and their grandmother, the bond bull's over. We're at 325. The Fed was raising. Trump was saying, don't do it. The Fed still raised. And within a couple weeks, you just broke a market, because everyone's like, wow, we can't live on 3% yields. And then it just crapped out. And then it all reversed. It went from the dot plot going up to now the dot plot going to 0. And gold is still cheap. Like, gold, if you're using those kind of like money printing, like M2 money supply things, gold should be like, you know, whatever you want it to be, 3, 4, 5,000. So I think and Canada's a hot mining market. And when mining is hot here, stocks go 20, 30, 40, 50x like you've never seen before. And I believe it's starting again now. I'm starting to see new IPOs. I'm involved in a lot of new IPOs. like first rounders, seed rounds, all that, and maxing them out, because I believe when it starts, and it started, I didn't see any gold IPOs last year, like exploration, but like I'm talking big deals, because the market was not what it is. When a cycle starts, you start to see them all, and they start to go. And I think we're in early stages, and I like the space.
Yeah, I think one of the other advantages, especially at gold, sort of the gold mining market, is that there's really a small number of opportunities to invest in, and when the big funds start to move into that space, there's very few places they can go. So the money comes in, and it sort of tidal waves into everything that's related to gold. So I fully understand that. So what do you look for in a gold stock then? What gets you excited?
What gets me excited is obviously the resource estimate, and I'm more of like I'm a numbers guy. Like I love reading PEAs, like when they show our IRR, and we're using 1,600 gold, but gold's really 2,000, and you're like, wow, the future cash flow of this mine is insane. Like, where I would even buy it if I had $100 million. You know what I mean? So I'll look at mining opportunities like that, like late stage or early stage, where they're exploring, and you can tell like there's something there. You know, or there's ones that I love even more, like an Altai or an Emerita, where they were mined in the 90s and drilled in the 90s, so they have like these pre-BRIEX numbers, which are non-compliant resource estimates. They're not up to NI whatever it's called, 41 whatever. So Altai has a prehistoric resource estimate, Emerita has one, and then if you apply what comparables are trading at, you're like, wow, either I found the golden ticket or I'm the wrong person. But you dig deeper and you're like, wow, no, I'll just stick with this name, and I'll just wait it out for the drill results. So
Gotcha.
That's what I look for. So.
Gotcha. Well, let's start talking a little bit more specific names then. So you mentioned Emerita. What else do you like out there?
On the exploration side, like late stage, I like the Quebec precious metals. It's another misunderstood story with a cheap market cap. Like assuming today's price, I think the market cap something like 18 million with cash on the books and non-core asset sales, that brings the enterprise value down to 12. So you got a $12 million enterprise value company that has a high chance right now that in their project they're drilling, they've already drilling 10,000 meters, that they'll probably have like at least 1 million ounces, maybe 1,000,005 ounces. And we're trading at, let's call it even 15 million market cap. So it's like $10 per ounce USD in the ground, whereas comps sell for $50, even 100 USD. So stuff like that, where I know it's an economical play, I love them because again, the market's mispriced right now in a lot of names. So that's one of them, is like another big core holding of mine, and I like that story.
What look at a name like that, what prevents it from being better known?
I know that's a good question. I can't even answer that. You know, it's Canada. Like, it's just I don't want to insult retail guys at home. I actually enjoy the retail traders at home. But the problem with the retail trader at home in Canada is he doesn't know what he's doing. He's listening to too many like evil sources, like buy this rumor or buy this stock, and it's like, what do they have? He's like, oh, they're gonna have this, they're gonna have that, and you go on the website, it doesn't make any sense. Like, you go look at the balance sheet and they're like, it's a zero. You know, and then you look at some of these mining stocks and it's like, wow, they actually have cash in the bank. Insiders have skin in the game. That's another thing with these mining companies. I have to see the insiders have a big chunk skin in the game. Like Emerita, they did a 5-cent round. Every insider joined, every board member joined. They did a 14-cent round because it was oversubscribed. Every insider joined again. You know, if they're putting their money in with you, you're in good hands. Like, you know what I'm trying to say?
Yeah. And I mean, I'm going to go back. Like, I've been in the industry for so long, and when I was involved in the mining space, you always want to see the address of the sort of the headquarters, not in a certain city, or maybe two different cities.
No. Who's talking about that?
You know what I mean, right?
No.
Yeah.
Don't you live in Vancouver?
I do live in Vancouver. That's why I know it so well, right?
I love Vancouver.
Yeah. But I mean, you know what we're talking about. So we do the same thing in the non-resource side. We're looking for real businesses, right? We're looking for guys that have their money at stake, and in some cases, they're sort of the retirement is at stake, where you're finding companies that they're putting in their own money. They're treating the shareholders' money like their own, because it technically is, and they really want to try to generate some value for everybody involved. So I love stories that nobody knows because
Yeah,
they're not
if I
out there to
remember
promote,
correctly,
right? They're out, yeah.
I missed it when you were doing the name silo one. I should have went in with you. I looked at the growth and the potential, and I'm like, it's a cheap tech name. I passed on it. But those
There's others.
send them
So
all to me. Send them all to
okay,
me
I'll
after this.
start. I'll
I'm
start sending
serious
them to your way.
because
Okay, yeah.
Paul, I'm very liquid right now, just so everyone hears on the TV, because there's rumors I'm not liquid, but I am very, very liquid and will continue to buy and average up on all my names like I have today. I added Emerita, I added ATI, I added QPM. Like, if I know where it's going and where it's at today, I don't care what it's at tomorrow or an hour from now. I'll wait. I'll go to sleep at night, because value investors can sleep at night, where these guys that don't know what they're buying, they're nervous because they don't know what the company's worth, Paul. Me and you, we know what the company's worth, and we know what the stock's at, and we know the delta, and that's, it's...
So you said something that resonates with me. I feel the same way, that if there was enough stock available, you buy the whole company, right?
Yes,
I think.
Yeah.
I think you have to go in, when you're an investor, if you're serious about what you're doing here, you have to go in thinking, if somebody's going to give me the whole company at this price, I'll take it, right?
Paul, it's funny you say that. I used to tell that line a long time ago with like bigger cap companies, like 500 mil. I would be like, if I could buy the whole company for this, I would take it all. But that's not how it works, and that's where the stocks, the spread is. And but yeah,
exactly,
so,
exactly.
yeah.
Okay, so you mentioned two names, Emerita and Quebec Precious. Any other names that you think are worth looking at?
Yeah, everybody knows on Twitter the names I like and the names I own. It's just, the problem is I don't even like talking about them, because a lot of guys are like gamblers. They care where it's at tomorrow. I'm like, holy, relax, it's down. Like, when stocks are down, I'm more happy, because then I buy more. If I know the stock is worth this and it's down today, I'm buying more. Why would I sell? These guys don't get that concept. Like, they're very fixated on what the stock is at. But if you know the asset price is not eroding, if anything, it's increasing because we're drilling more holes, blah, blah, blah. We all know how it works. And the stock's dropping, it means and the price of gold's going up, it means you are lucky today. Like, some stocks I own right now, not like, if there was a non-event and they woke up tomorrow and they're down 50%, I'm happy. I'm not crying, because I'll buy more. You know what I'm trying to say, Paul? Like, you have to have that mentality too. Always have a bit liquid, like 15%, like in a little pool, that, like, if the world ended and like some of your value names cut in half, like everyone's broke one day. But you got to look at it like that too. Like, on down days, be happy. Like, Emerita was down today to 26.5, 27. Like, okay, bring it on. I'll buy more. Like, you know what I mean? Like, people get scared of down days. I look at the opposite. I'm like, this is an advantage. I can buy an investment. This is an investing. This is not trading. This is investing. People don't get it. There's two different things. I trade too. I buy calls on Amex, and I flipped them yesterday, and I believe it'll rip by Friday, but maybe I'll be wrong. But that's different. I'm a trader. I'm an investor. I'm an activist. I'm everything. But people got to realize and separate the promote from a real company. And that's how I got in this business. I got in through, like, this big war with Africa, and in the end we were right, and it was the better deal, and it was bear rated, and it's bullshit. That's another passion of mine, is the naked short selling in Canada, but we won't get into that one today.
Save it for another time. Yeah, exactly.
Yeah, exactly. But Paul, talk about your picks. Talk about your
picks. You turn the tables on me.
That IPA is interesting.
Yeah. Okay. Well. Okay. First off, IPA. I'm a director of IPA and a significant shareholder. So
we have a mutual friend, Paul. We have Sean.
Which Sean? I know a couple of them.
From Sophic Capital.
He's good. Yes. Awesome guy.
Yeah, he's the G. I love him.
Yeah. Awesome. And actually, a number of his companies have been ripping as well. So he's
exactly, like, he's cracking. It's our year for value. Like, value was dead in Canada up until I find a year and a half ago. It changed somehow. There was a lot of privatization. Like, a lot of companies went. So it's in the right. We're in the right direction.
Exactly. I mean, microcaps come in and out of favor every now and then, because especially the last couple of years, I think a lot of money's gone up market because it was so liquid. You had these ETFs, you had all that stuff happening, and then what's happened is they run out of value opportunities, and now a little bit of money coming into the microcap space, and you see things explode. So we've been fortunate. We caught a lot of those. But
Paul, don't forget to send me your list after.
I will send you the list. Don't worry, I'll send you the list. You got it.
As well.
Yeah, you got it. So I mean, you know what? The way we operate, we don't go sector by sector. We're bottom up guys, right? So we're constantly looking for really obscure little names, and we've been fortunate. One name we like right now is a a company called IQ or Air IQ. It's a little
I know them
business out
very
of
well.
Toronto. Yeah,
You're not
there
going
you
to
go.
believe this. True
Yeah.
story, so you know I can't make this up.
Yeah,
I owned that company in the high-tech bubble of 99. It was a different company. It was like Edis
absolutely.
Patcher. What was it
Yeah,
called? It went to $20, that name or whatever it was.
yeah.
It was a weird stock.
Yeah. I mean, it all got caught up in the whole logistics and,
But
asset tracking
Paul,
business. Yeah.
problem with that name, call them up. I'll take a 10% like financing because they can't buy in the open market on that name.
It's exactly.
So
Yeah.
how do you win with that though? That's the problem. I've always wanted to buy that stock. You can never get size.
Oh, you should have contacted me about 4 weeks ago. We managed to get across. About 10% of the company was for sale, so we managed
What
to take a
price?
big piece of that cross.
What price?
At 23 cents.
Oh, it's gone up. I was watching it
Yeah.
last year, I think around 12, 13. I loved it. I think it was trading at working capital last year. It's so stupid.
Yeah, no, we every now and then you're going to bump into some of these companies that are like that. But this is now got the growth engine, right? Starting to make money and starting to grow nicely. So,
I have a couple companies like that, but we'll save that for another day.
Yeah.
That are trading for like 2 times sales, and they're all 3 baggers, but the management needs to align with the cost. Well, what these companies don't understand is, let's say they can run their debt. Let's say they got a 6% line of credit, whatever. But if your company could sell for like 3x what it's on the market, your cost of capital is actually like 33%. Sure. You know what I'm trying to say? If you look at it as a whack, equation. So these guys that think their stock's cheap, it's actually such a negative because your cost of equity is so expensive.
Yeah.
Buy back your stock, do this, do that. And these guys, they don't get it. But anyways,
yeah. Well, a good example. I mean, IQ is trying to buy back their stock, so at least they recognize that part. But no, I mean, we're constantly looking for things that are completely mispriced, and we're always stumbling on a few. And
there's another one I still own a lot of, and it's mispriced. As an example is Mimi's Rock.
Right.
I know that.
Yeah.
Doesn't make any sense. Comes out with its Q2 numbers, full print, full net, like taxes, net print, 2 cents EPS. An Amazon reseller, they will do 8 cents EPS this year if you annualize that. The stock's trading at 40 cents.
Yeah.
Like, go figure that. Like, a cash cow.
Yeah, exactly. It popped up on our screen just literally this last quarter. So I think we're playing in the same sandbox.
For sure we are. Yeah, that's good alliance we have here.
Exactly. Yeah. So what do you think? The average retail investor, you got a lot of guys following you on Twitter.
I don't want them to follow me though. Paul, disclaimer: don't follow me. Don't. I'm a nobody. Okay, seriously, don't follow me on Twitter. You don't want to.
No. You know what? What I find it's the guys that don't. There's a lot of pros that you see on BNN and guys that pretend to know what they're doing.
Yeah.
The guys that are really doing it are guys that are very obscure, and you actually don't hear too much about them. And every now and then they they'll mention something on Twitter or something, and they sort of people recognize what's going on. I think that's the case here. But you've been at this a long time now. If there's one thing investors are doing wrong and they should really change, what would that be? The retail investor.
The retail investor has to learn the psychology. It's taken me forever. I'm a value investor. I'm the worst kind of investor. Why? Because I buy stocks on the way down. It's bad. Find a value name and wait for it to start going up, then hammer it. Because at that point, it's not like a wizardry trick. You just know that there's no more sellers left and it's all systems go. You know what I'm trying to say, Paul? Like, the trend is your friend. It's taken me a while to learn that. Another guy's Grant Beasley. He taught me that with the arrow. If the arrow's up, just follow the arrow, and it's that simple. And once it breaks that arrow line, then sell it and see you like next year. But I think the investor at home's got to follow the trend more.
Yeah,
that's it. So
it's funny because when I first became a broker, I had a mentor, and he said, and this is a line that I've since heard all over the place, but he said, only buy stocks that are going up.
Yes, exactly.
And my response was, okay, what if I end up buying a stock that goes down? He goes, don't buy it.
That's awesome. Yeah. It took me 10 years to change my strategy. I'd always find stocks that were at its 5th 2-week low, like dumpster diving. Yeah. Now I don't do that. I'll find a value name that the chart's turning up, like, you know what I mean? Yeah.
So it's good that you said that, because one of the things that really changed my investing philosophy, and I think a lot of people have heard me say this, but there's a book that I read called How to Make Money in Stocks. And it actually is all about buying 52-week highs, right? And you get taught in this industry, you buy low, sell high, right?
Yes.
And the real way to make money is you buy high and sell a lot higher, right? So if a stock's going to go from $1 to $100, at some point it's going to be hitting a 52-week high, and that's almost the easiest way to recognize a stock that's going to do that, right? So,
That's like me with the Emerita. I've entered my position at 4 cents. I bought a whack load at 5. I tweeted it. Lots of liquidity. I took it at 5 in May, and I've bought it as high as 36, and I'll keep buying it all the way up. Like, if they win that other property and it only bids 60 cents the next day, well, guess what? I'll still bid it knowing it's $5 stock. Like, these are billion-dollar projects on a market cap of 28 million. If you roll the dice on like a risk-adjusted basis, like, is the market sleeping here? That's fine. I'm comfortable knowing what we have. You know what I'm trying to say?
Yeah, absolutely.
Absolutely. Patience is another big thing for the retail guy. Nobody has patience. Patience is key in this business, because if you know where you're going, you'll get there. Just slow down, you know? So.
Yeah, no, exactly. What do you think is going to happen over the next 6 months? Just generally in markets and, you know, politics, U.S. politics, obviously going to have a hand on things that are going on. But what do you see over the next 6 months? What should investors, do you think, pay attention to?
I can't answer that yet. Like, let's say tomorrow or by Friday, like today's actually the trend line apocalypse, and the algos decide tonight to go all haywire. And my answer I give you is it will change. I can't see that far out, because we're at that critical threshold now. Like, you're almost got like a megaphone on the market, like higher high, but that lower low, like that we penetrated in March, it's almost like it wants to go wonky, but then it's like never bet against America. Like, a lot of my other stocks, like more money is devoted over there, and I sell calls, puts. Like, I do like an income rake strategy there, which I love too for value investor, because you can sell puts and calls and generate yields of like 8% monthly unlevered, because then the brokerage house will lend on that, and you're making like 30% month on your money. Like, it's insane. But that will save for another episode. But I think the market is going to be range bound from here to the next 6 months. I think the S&P will hover around 3,000. It'll obviously drop erratically at some point and come back up, because there's too much funny money in the market. There's too much FOMO. This market drops, everyone can't wait to buy a dip, because where else are you going to put your money? Nowhere. So, what are your thoughts on the market?
Well, I probably a bad question to ask, because we're both sort of value-based investors, and value is determined by what the market is telling you rather than what you're predicting the market to do. Right.
Yeah.
So
macro too is not my strong suit, like you. So.
Yeah. Well, I would say the same thing. I'm terrible. Like, if somebody, like, apparently the Dow dropped 500 points today, I wouldn't have known if somebody didn't tell me today. I just don't watch that stuff.
Here's a good example of that.
Yeah.
I'm like, there's a market panic. Even the venture got whacked today. Emerita went up. Amazing. Stocks only go up. Another fun position I've been doing research on, because I've had a lot of problems with my cell phone the last couple of weeks, that I decided to fire up my old BlackBerries. And then I looked at their stock, and I'm like, America's in a high-tech bubble, and BlackBerry's here. I might start buying some call options farther out, because I think that's another company that's misunderstood.
Right.
There's something there. Like, it's another strip asset play that could be a $15 CAD stock.
Yeah.
I don't know what you feel about BlackBerry, if it's a value trap or not, but I don't know.
That's out of my league. Like, I don't. I focus so much on sort of the microcap universe that I have, that I wouldn't have a clue what it was trading at or close to it.
Oh, I see. You're just focused on micro. That's it.
We're just focused on micro. That's it. We're looking for the one that's gonna give us 100 time return on our money, and we'll keep looking until we find them. So,
Paul, I think you're involved in that other one, because I've used their product for my cars. Is the Expel stock? Remember that?
Yeah.
I'm so pissed. I'm like, what a genius product! Like a 3M knockoff. Look at that business, how fast it grew. Insane. Tell people the story. Pennies to what?
Yeah, so we were buying it at 17 cents. What it hit? I think it hit $30 US just a little while ago.
It's insane.
But
again, penny stocks are scams somehow. What people say when I introduce an investing idea, it's like it's a scam. It's a penny stock. I'm like, it's a business. It's not a penny stock. It's a business.
You know what? Like anything, if you want to find the garbage, you can easily find it. But if you want to find the gems, and if anything, the more people tell me that it's full of garbage and full of scams, the more I know they're wrong, because there's more mispricing when we find something. So
I agree with you.
Yeah, Expel is a perfect example. It was nobody knew about this company. It was this weird U.S. company that was listed in Canada, trade with a U.S. dollar denomination, and And then nobody had ever heard of this paint protection film, and it was just after the financial crisis, so everybody thought nobody was going to buy cars ever again. And look, I mean, 17 cents to $30. So those are the ones who we're looking for all the time, and we find them from time to time. So there's certainly some gems out there. So that's cool. But so outside of gold, do you see any other sectors that make sense?
Yeah. Just like stupid value where like it's a trap, but it's okay because it's an income producing trap. I love REITs here, Canada and stateside. You can't bet against real estate because everyone's still going to fill it. The cap rates are obviously going to drop, but guess what? Yields are going to stay at zero forever. How can we even try to get out of this mess now? Like even go to even like 150 on like the 10-year, it's impossible. Like it'd be a disaster. Like maybe I'm seeing it wrong. So I still think like in terms of those assets, like even restaurants, like royalty restaurants, like the Keg, like Pizza, like those names, if they get whacked again, like March, not to those levels, but like if there's a crash the next couple of weeks, I would start buying those names for long term, like for income producing, but
yeah, no, I can understand that as well, especially so I mean, COVID is having such a sort of disconnect or causing such a disconnect in everybody's view of what everything's going to look like long term.
Exactly.
But people still have to eat and they still have to live somewhere, so
exactly,
it makes complete sense.
I
know you mentioned that you might be running tight on time, so are you still good, or do you
we'll do one more question. My cell phone's burning my hand right now and it's probably gonna die pretty soon. Sorry, I'm in Toronto. I'm gonna be in Yorkville if anybody wants to come like have like a signature or something. But I love Toronto. Like, what a nice city. I haven't been here since PDAC, but I didn't get to experience York Vegas, as Grant Beasley calls it. What a great little city. Like, Toronto is just it's a happy place.
It is a cool place, absolutely.
What's the next time you're in Toronto,
Paul? Good question. Probably spring. I don't think we'll be making it out. I'm usually there 3 or 4 times a year. Obviously, the last lot's a little tighter to go, but I'm out there for a bit. Definitely. And you're not in Toronto though. You're in what, Ottawa?
I'm Ottawa, Montreal, Toronto, and supposed to be Vancouver tonight, but I don't know. We'll see.
Gotcha. Well, if we ever get a chance, we'll grab a bite or something for sure.
Paul, what we have to do here is we got to get you to be a gold bug. We got to get you on one of our gold deals.
Well, I need an expert. I need an expert and tell me exactly what I should be looking at. So I've got a couple names here.
I'll take you out for lunch tomorrow. Okay.
Okay. Good. Okay. We'll do it.
Paul, thanks a lot for inviting me on this. Like,
no, it was fun. It was fun.
Yeah.
And we'll catch up again some other time. But Johnny, I appreciate the time we've had together. I've learned a few things, which is always a bonus. And,
as well from you. And Trevor, I say thank you. He did a great job arranging all of this.
Awesome.
He DM'd me on Twitter out of nowhere. He's like, "We want to get an interview with Paul." I'm like, "I love that guy. He's a G value guy." I'm like, "Of course." I'm so happy. I'm like, "Yeah, set it up."
That's cool. I appreciate you saying that. So let's catch up pretty soon. But Johnny, I want to thank you for hanging out today and sharing some ideas with everybody. All right?
Thanks a lot, guys.
All right.
See you, Paul.
Take care of yourself. Okay.
You
Cheers.
too. Bye.
Okay. Bye-bye.